Welcome back. And in our top business story, consumer confidence in the UAE was among the highest in the world during the second quarter as sentiment improved according to the latest Nielsen Consumer Confidence Index. The UAE was ranked 6th globally with a score of 109 points, up 5 points compared to the previous quarter. Saudi Arabia was also in the world's top 10 with a score of 104, the same as Q1, compared to a global average of 98. Nielsen said that while 48% still believe the UAE economy is going through a recession, that figure represented a drop of 9% compared to Q1. Job prospect sentiment improved by 9 points to 60% favorable, while personal finance sentiment improved by 6 points to 68% favorable. Globally, the Philippines, India, and Indonesia recorded the highest levels of consumer confidence, as average levels held steady in the second quarter at 98. North America was the only region to sustain growth momentum in the second quarter, demonstrating a 3-point increase in confidence to 111. All other regions remained essentially in a holding pattern with relatively stable quarter-on-quarter index levels. Abu Dhabi government's large net asset position continues to provide a considerable buffer to mitigate the impact of commodity market volatility on the economy, according to Standard & Poor's. The ratings agency affirmed its AA and A1+ sovereign credit ratings on Abu Dhabi with a stable outlook, which reflects S&P's expectation that Abu Dhabi's economy will remain resilient and its fiscal reserves will well above 100% of GDP. The agency said that it projects reserves to be maintained at about 260% of GDP on average over 2016-2019. It added that despite the recent decline in oil prices, Abu Dhabi maintains one of the highest GDP per capita levels in the world, and its very strong net government asset position, mostly in foreign currency, makes the Emirates' economy resilient to shocks in the commodity market. S&P said it estimates Abu Dhabi's GDP per capita at about $68,000 in 2016, with a contraction of about 3% on average in 2016 to 2019, largely due to high levels of immigration. The agency said that the real economic growth rate at 6% was much stronger than the previously expected 2% as oil production increased. Air Arabia has announced strong financial results for the first half of the year, reporting a net profit of 245 million dirhams. The net profit is an increase of 3.5% compared to the 237 million dirhams reported for the same period last year. The company's turnover for the first 6 months of 2016 also increased to 1.84 billion dirhams from 1.75 billion dirhams in the corresponding period last year, an increase of 5.5%. Air Arabia flew 4.1 million passengers during the first half, which was up by 14%, and the airline's average seat load factor, which is a measure of passengers carried as a percentage of available seats, stood at impressive 79%. Air Arabia flew over 2 million passengers in the second quarter ending June. The company's turnover in the second quarter ending June 30th, 2016 reached 894 million dirhams, an increase of 4%, while net profit during the second quarter stood at 131 million dirhams, 14% less than the corresponding period of 2015. According to a statement from the airline, this reduction was driven by a regional shift in traffic in the second quarter of 2016 due to the month of Ramadan and the excess in capacity available in the market, which is affecting airlines' yield margins. Gold jewelry demand in the UAE fell by 26% in the second quarter compared with a year earlier, as overall demand in the Middle East declined because of high gold prices and the oil price rout. London-based market development body, the World Gold Council, said in its report that demand in the UAE slid to 11.1 tons in the 3 months to June 30th from 14.9 tons a year earlier. Overall gold jewelry demand in the Middle East decreased by 22% year-on-year to 45 tons. The price of gold has surged by 27% this year due to unstable economic growth and low interest rates. The gold rally comes after prices fell last year for the third year in a row, shedding 11% as the U.S. increased its interest rates in December for the first time in a decade and the dollar rallied against other currencies. The steepest decline in the region was in Egypt, with a 40% drop to 5.3 tons, while Turkey also suffered from weak demand in the second quarter. Iran, however, registered a year-on-year demand increase of 10% to 8 tons, thanks to optimism from the lifting of sanctions in January. The UAE reported the sharpest year-on-year decrease in demand for gold bars and coins of 40% to 1.4 tons. It was followed by Egypt with a 35% year-on-year slide to 0.8 tons. The only exception was Iran with a 2% year-on-year increase to 7.2 tons. Globally, gold demand soared by 15% year-on-year to 1,123.4 tons, driven by investments in bars, coins, and exchange-traded funds.